Welcome. Let's take a look now at some of the events to watch out for us traders for the week beginning Monday, the 30th of October. Before we get into the numbers, though, just very quickly, just want to highlight the difference in timing for next week, because here on this side of the Atlantic, Europe and the UK, we move into winter time. Here in the UK, we move into Greenwich Mean Time, which means that there's only a 4-hour time difference between the UK and the US Eastern Seaboard, which means that we'll have to adjust timings for all sorts of things next week, including some of the big events like non-farm payrolls, which will be in at 12:30, not 1:30 p.m. UK time, and the Fed interest rate decision. Instead of 7 o'clock in the evening Wednesday, it comes through at 6 o'clock. So you have to account for all that. And of course, Wall Street gets underway an hour earlier as well. And our show, Beat the Street, will be an hour earlier too, as we take into account that time difference. It's only 1 week, and then come the 5th of November, US catches up, it all goes back to normal. Let's take a look at the agenda for what's happening on the economic side of things. And we begin on what's happening on Monday, the 30th of October, Australian retail sales. We've been focusing a lot on what's happening with the Aussie dollar recently, the weakness in that. Be interesting to see if this follows through with what could potentially be a weak set of numbers on retail sales. German consumer prices as well, a really big number out for the European Central Bank to continue to monitor. Let's take a look at what's happening on Tuesday. Big day in Japan. We start off with the Bank of Japan interest rate decision, but it's not just that. It's the unemployment rate, it's the industrial production number, retail sales, consumer confidence. You remember recently we were talking about the unscheduled participation in the bond markets from the Japanese authorities. That gave a little bit of support to the Japanese yen, but we've seen that dollar rise above the 150 yen level, significant in as much it doesn't appear that they've come in with any major market moves to try and support the yen. We'll see what happens with that statement around the Bank of Japan. Meanwhile, we get the Chinese manufacturing services PMI data for the NBS. In France, we get third quarter growth numbers along with consumer prices. Germany, we get growth numbers in the third quarter. These are all first snapshots of third quarter growth figures, and the eurozone as well. And then later on in the day, the consumer board consumer confidence number out in the States later on. Very much a day orientated around the euro dollar trade, which we'll continue to monitor as we see all this data released. Let's take a look at the first day of November, comes the midweek, and the big swing point of the day, as I said, is likely to be the Fed interest rate decision. And that, as I said, is at 6 o'clock, not 7 o'clock in the evening UK time, something worth watching out for. Earlier than that, 12:15 p.m. UK time, we get the private payrolls number ADP for the employment change for the month of October, ISM manufacturing data, JOLTS job openings, and the EIA crude oil inventories. Just a quick update on some of the other numbers out earlier in the day. We get the Caixin manufacturing PMI data out in China, and also the nationwide house price index as well for the month of October. Let's run into what's going on the 2nd of November, Thursday. We get the Bank of England's interest rate decision, high noon. No move expected, as indeed was the case as well for the Fed. So just to quickly remind you about what's going on there. And so all three central banks this week, no move expected from any of them. It's all about that anecdotal comment. Will the BOE fire a warning shot across the bows about the inflation number continuing to hold at these high levels because of a rise in the price of oil? I suspect we could well see some commentary around that. German unemployment and the US weekly jobless claims as well to watch out for on Thursday. And then just a quick look at what we got on Friday. Rounding off the week, the Caixin services PMI data out in China, eurozone unemployment, and the big one for the week in terms of some of the macroeconomic data coming through is US non-farm payrolls. Yep, that's it. It's at 12:30 UK time on Friday. Let's now catch up with Tasty Live and off now to Chicago, and Tom Sosnoff joining us. Tom, welcome. Great to be able to talk to you again. We've seen this uptick in volatility this week. Are you expecting that to continue into next week? We're running down now in terms of some of the earnings, of course, but we do have, as we just explained, some interesting data out next week. But I know you guys look at volatility a lot. Give us an insight into your thoughts on where this measurement is going.
Well, it's interesting because I think volatility is kind of, one of the most important topics right now, because for us, the majority of our trading is strategic. So it's options related, it's futures related, and volatility plays a huge role in pricing there. And clearly, long-term mean in volatility is somewhere around 17, 18 level. And right now, we're in the low 20s. So we're clearly about 10, 15% above the mean, which means that there's expectations. All volatility is an expectation for a large, for the size of the move. So right now, the marketplace is really telling us that, what we were seeing for much of this year, 2023, which has been very tame volatility-wise, is changing right now. And the expectations for moves that we've seen for the first 3 quarters of the year is going to be very different in the last quarter. So how you break that down is just you have to kind of change, what you're thinking. Like if you used to be thinking, okay, an index might move, let's just say 20 points. Now it's going to move, 27 points or 28 points. And so expectations have to change a little. You have to adjust your targets. And right now, given what's happened in the last week or so, I don't see volatility dropping off anytime soon. If anything, I think there might be a couple of upticks left in it. We haven't seen kind of that blow off yet at all. We haven't seen kind of that, any kind of a hysteria, any kind of, real blow off tape action. So I think volatility, before it gets into a more complacent state, still has a little room to run.
From a fundamental point of view and a macroeconomic point of view, we've been monitoring what's happening here with the US 10-year Treasury yield. It continues to trade around the 5% level. And as that goes up, we seem to indicate or seem to see the indicators point to higher volatility. And that means people take money off the table for risk. Do you see that as a pattern where we see risk being sort of not really the favored trade? We're witnessing a lot of safety trades going on. Is that something that's going to continue?
It does, sure, because it does change the dynamics of trading. When you think about a 5% risk-free return in the US, I'm not sure exactly what it is in the UK right now, but if you think about a 5% risk-free return in the US, and you think of yourself as like I do, as an active trader and a self-directed active trader, your expectations of what you need to make to justify, all the work you put into trading and what you expect to make out of it have to be some multiple of risk-free rates. So if risk-free rates are 0 and you make 8%, you're doing great. If risk-free rates are 5% and you're making 8%, I don't know if it's worth the risk. So your expectations have to change. And obviously, if volatility is higher, you can make more money. So I think that is the correlation. That's the relationship between, I don't think 5% per se means anything as far as traders go. Like, I don't think that's a number where we get scared and we say, hey, you know what, we're not going to trade anymore. I think it's just, it changes the expectation of what you need to do risk-wise to make enough of a multiple of risk-free rates to make trading something that that's worthwhile for you. And I think that's the whole challenge.
Yeah. Okay, look, Tom, we'll leave it there. But thanks for joining us. Interesting insight into volatility and the use of using risk as a swing point. Tom Sosnoff from Tasty Live. Let's take a look at what's happening with the corporate calendar, because we see some interesting moves in the next week, but not nearly as much as we've got in the prior week. Let's take a look at what we've got coming up for the week ahead. And Monday is relatively quiet. Remember last week we saw what had been an interesting report coming through from Standard Chartered. This is the UK-based bank that has a lot of business out in the Asia-Pacific region, most notably China, where it took an impairment charge of around about $1 billion because of its exposure to Chinese retail and the banking sector, and also to property. HSBC does also have a lot of business in China, although it is curtailing some of that in terms of wealth management. But HSBC doubtless will have something to say on that as well. It's reporting third quarter figures on Monday, along with the mining giant, or the trading giant in the mining sector, Glencore, third quarter production report, the media company Pearson on third quarter trading statement, and Mackie D's reporting before the US markets get underway. One of the all-session stocks to watch out for on Monday before Wall Street gets underway. Tuesday 31st, big oil stocks reporting next week, including BP and also Shell later on in the week. I'll cover in just a minute, but BP coming through with numbers for the third quarter. First thing on Tuesday morning, like a lot of these oil companies, benefiting from the relatively high price of oil. AB InBev and Carlsberg and the brewing sector across the European markets out with numbers. Stellantis, big business in the States. Stellantis has got, and of course, it's had exposure to the UAW, the union, striking union in the United Auto Workers in the States. Interesting to see what Stellantis has to say. Will it be along the lines of what we've been hearing from Ford and General Motors, both of which have taken a hit because of those strikes? Airbnb, Pfizer and AMD out with numbers as well a little bit later on on Tuesday. Midweek trading session, just a run through of some of what we got here in the UK. Metro Bank, Aston Martin, Lagonda, GSK, the drugs giant, and Next out with figures. Out of the States, Kraft Heinz, AIG is an all-session stock on the AIG platform. Mondelez, Estée Lauder, and Qualcomm later on in the day after the closing markets, another all-session stock to watch out for. Let's move on and take a look quickly at what's happening on Thursday. As I said, Shell out with numbers, certainly worth watching on Thursday morning. We'll also be following up on the early morning call with numbers out from BT Group to work out how that stock's going to open as well, along with Sainsbury's. Haleon reporting third quarter trading statement. This is the company that was spun out from the business of GlaxoSmithKline. It's a personal healthcare business, and that reports its third quarter figures. In the German markets, we got Deutsche Lufthansa, ING Group. Later on in the day, Apple, all sessions on the IG platform worth looking at. This company reports its fiscal fourth quarter numbers after the closing bell. We also have that day Coinbase and Moderna, two other all-session stocks in the US. Also watching out Peloton Interactive after the bell on its first quarter figures as well. Another all-session stock worth trading. Let's move on to take a look at the last trading day of the week. We have just two companies looking at Swiss Re and BMW, the German automaker, both coming through before the market opens, both on third quarter figures. And that's it for a look ahead for the week starting Monday, the 30th of October. Join me at 7:30 a.m. UK time for the early morning call.